Most people think a bad credit score is a life sentence. Banks stop taking your calls. Credit card companies won't even offer you a 25,000 rupees limit credit card. And even if you have the money today, getting a personal or a housing loan just seems impossible. But what if I told you that your credit score isn't your destiny? It's just data and some industry rules and regulations. And like all data, it can be cleaned, corrected, and completely transformed. Hey all, I'm Nikhil Shetty, founder of Kingston Capital, where we specialize in credit repair and improvement services. And in today's case study, I want to share some of my most satisfying clients and their turnaround stories, how we helped a client go from a crippling credit score to a solid credit profile that banks love. No shortcuts, no fake trade lines, no magic. Just a clear understanding of the credit system, RBI-backed dispute mechanisms, and a process that works. The idea behind sharing multiple case studies is to make you see what types of issues can come in someone's credit report and how customized approaches are needed to resolve them. If you or someone you know is stuck in a similar situation, this story will show you what's possible and how quickly things can change when you have the right strategy. Now let's dive in. First case study is about how we took Anuj's credit score from 670 to 716. Now Anuj single, a young professional who approached Kingston Capital after facing repeated credit card rejections. His credit score was 670, close to the good zone, but not good enough for approvals from major banks. Now, a credit score doesn't drop overnight. It's the result of unresolved accounts, miscommunications with the lenders, or outdated remarks that stay on your record for years. Anuj's case had all of that. Let me give you a detailed diagnosis. We pulled his credit report and found two key red flags. Anuj had a credit card and the status by the bank for the same was mentioned as overdue and written off in his credit report. Now this means the outstanding wasn't just unpaid, it was written off as a loss by the bank. Now this is a good enough reason for credit bureaus to mark Anuj as a cautious borrower in their records. The second issue is regarding his consumer loan from an NBFC. The status here was passed off as settled for this loan in his credit report. Now settlement usually means the borrower paid less than the full amount due. This is better than the defaulting but still seen negatively. These two remarks were acting as a roadblocks in his credit journey. The system wasn't ready to forgive just yet. Now in the next step, I'll talk about how Kenston took step-by-step actions to resolve this. As step 1, report analysis and bank coordination. We first got in touch with the bank through Anuj Singhal to confirm the foreclosure amount, the exact amount required to fully close the overdue credit card account. At the same time, we opened communication lines with the NBFC through again Anuj Singhal, asking for documentation and clarification on the settled remark and understanding if it could be corrected. Resolution via payment and dispute process. Anuj cleared the full foreclosure amount for the bank's credit card. Once the payment reflected, we filed a structured dispute with Credit Bureau to remove the written-off tag and mark the account as closed. For NBFC again, we submitted additional documentation and formally requested correction of the settled status to closed or fully paid based on revised terms. Step 3. Close monitoring of Credit Bureau updates. Over the next few weeks, we tracked Anuj Singhal's credit profile closely. Once the changes were accepted and reflected in Credit Bureau, we verified the status updates and ensured both negative flags were removed. Now let's discuss about the final outcome. Real measurable improvement. The results were clear and fast. Credit score increased from 670 to 716, putting him into the good category. All negative flags are removed. No more written off a settled status to drag him down. Credit card eligibility restored. Within weeks, Anuj Singhal became eligible again for new credit cards and personal loans, offers he hadn't seen in over 2 years. This wasn't just about improving a number, it was about restoring confidence, unlocking financial independence, and removing the stigma attached to poor credit history. Anuj now has a clean credit profile, a higher score, and the ability to move forward financially with proper guidance on how to maintain it. Now let's move to case number 2. Imagine being denied a loan for no fault of your own. You have done everything right. No new defaults, stable income, good intentions, and yet your application keeps getting rejected. Why? Because a shadow from your financial past won't go away. That's exactly what happened to Ashwin, a salaried individual who approached Kensington Capital in distress. He wasn't fighting a bank or an NBFC, he was fighting a ghost. Let me explain you the problem. When the lender doesn't exist anymore, Ashwin's credit report showed an overdue loan from a small local NBFC. But here's the twist. The RBI had already cancelled their license. There was no customer support line, no repayment portal, no grievance redressal cell. Every attempt Ashwin made to clear the dues or get the account updated led nowhere. Worse, the overdue loan continued to reflect in his credit report, blocking his access to fresh loans. His financial present was being punished for a mistake buried in the past with a non-functional institution. By the time he approached us, he had tried everything and was almost ready to give up. Kensington Capital's intervention in the Ashwin's case, fighting the system within the system. At Kensington Capital, we have seen a fair share of tricky cases, but this was very unique. There was no live lender to deal with, no NOC could be issued, no one was responding. Here's what we did. Step 1. Regulatory research. We started by digging deep into RBI guidelines for defunct NBFCs. These regulations are not commonly understood and most credit consultants don't even know they exist. We found provisions under which borrowers can escalate unresolved credit entries caused by inactive or deregistered lenders. Step 2. Multi-level escalation. We first attempted direct communication with the company but received no response. We took it up through the formal regulatory channels, including representation through credit bureaus, filing disputes with supporting documentation, and escalation to RBI's Consumer Education and Protection Department, where applicable. It wasn't quick and it wasn't easy, but it was effective. Step 3. Successful removal from credit bureau. After weeks of persistence and structured follow-up, the overdue account was finally removed from Ashwin's credit report. The outcome, credit repaired, hope restored. In the credit report, the incorrect overdue loan entry was deleted. Loan eligibility restored. Ashwin can now apply for personal loans, car loans, and even home financing. Peace of mind returned. Most importantly, the constant anxiety that came with rejection is now gone. Ashwin was overjoyed. What felt like an impossible case had been resolved, not through shortcuts, but through regulatory knowledge and persistence. This case is a reminder not all credit problems are created equal. Some require a deep understanding of the system. Now let's move to case number 3. How a duplicate PAN destroyed a man's credit score. It's an identity crisis uncovered. The Income Tax Department of India issued the same PAN number to 2 different individuals. That's right, 2 people, 1 PAN. One massive identity crisis. For example, Mohan Das, our client, is a rightful holder of PAN number XXX. But someone else also named Mohan Das with a different photo, signature and father's name was also issued a PAN card with the exact same number. The result? Credit bureaus like CIBIL, Experian, CRIF and Equifax couldn't tell the difference. Banks saw one PAN and assumed it belonged to the single person. Financial data got merged. Mohan Das' report now showed loans, credit cards and defaults that had nothing to do with him. The impact: his financial identity hijacked. False loans, credit accounts he never opened suddenly appeared on his credit reports. Loan rejections. Every time he applied for a personal loan or credit card, the system flagged him based on someone else's delinquencies. Mental stress. Weeks turned into months of frustration. No resolution when he contacted banks. They simply said the PAN matches, the data is valid. This was a full-blown case of credit mismerging caused by government-issued duplicate identity. Our investigation. We became the credit detectives. When Mohan Das came to Kensington Capital, we knew this wasn't a typical repair job. We took a forensic approach, cross-referencing loans. We manually checked every unknown loan account linked to his PAN, noting inconsistencies in his KYC details, identifying the duplicate holder. We tracked the alternate profile, Mohan Das, who was issued the same PAN with differing demographic details. We made a formal communication. We contacted him and requested a voluntary surrender of the duplicate PAN. The resolution: fixing what the system broke. We filed a formal complaint with the Income Tax Department, documenting the PAN duplication with proof. Once they acknowledged the error, we pursued cancellation of the invalid PAN card. In parallel, we raised disputes with all credit bureaus, CIBIL, Equifax, Experian and CRIF. to remove inaccurate data. After months of back and forth, Mohandas's credit report was finally purged of all false loan accounts, and his financial identity was absolutely restored. This case exposes the flawed over-reliance on PAN as a sole identifier in our credit system. One tiny error by the income tax department caused years of damage. Credit bureaus lack the verification filters to detect mismatches in name, photo, or parent details. Bank refused to act even when evidence showed the accounts weren't his. Your financial reputation is only as strong as the system that records it. Our recommendations: to avoid the next identity crisis, audit the PAN database. The government must actively identify and cancel duplicate PANs. Bureau flagging systems. Credit bureaus must flag profiles with conflicting demographic data tied to the same PAN. Stronger KYC enforcement. Banks and NBFCs must cross-check more than just the PAN. Father's name, address, and photos must also align. Our final thoughts. Credit is fragile, safeguard it. Mohandas didn't default, he didn't miss an EMI, he simply became the victim of an identity error he didn't even know existed. But through persistence, investigative work, and system level intervention, we helped him take back control. At Kenston Capital, we go beyond just the dispute filing. We become your advocate, your researcher, your problem solver. Whether it's a settlement issue or a ghost entry from a cancelled NBFC, we fight to restore your credit dignity. If you are suffering from such an issue, please feel free to reach out to our team. The link is in the description. I'll see you in the next video. This is Nikhil Shetty, your credit score expert, signing off.